So far, we are pretty good this year, but we're working on that currently. Let's keep going here. So just to recap what we talked about last week here, what is tape reading and how can it help you, number one? I mean, it's price action analysis. What we're doing, what we're essentially doing is that we're gauging short-term supply and demand to give us a theory on future stock price. Now, how does this help here? How does this beat the other technical indicators, so to speak? Well, number one, the indicators, let's say you're using moving averages, or let's say you're using Bollinger Bands, or let's say you're using all this kind of stuff, all of that data is processed after all these transactions hit the market, right? And they are analyzed, and then it spits out sort of a number for you. And depending on that number, it might say the stock is strong, it might say the stock is weak. But what if you knew deeper into that? What if you knew supply and demand deeper into that? What if you knew smart money was actually building a position in that particular stock? What if you could see it, right? Then you could see it first before your indicators actually say, okay, it's time to go ahead and buy this thing. And I'll show you a couple of different examples of how we do that. So essentially, you're looking at size of stock orders. You're looking at order speed, okay, how frequently you're seeing orders go off. And then obviously the price that you're taking a look at. And again, tape reading is a very successful way, okay, to identify trends in trading behavior, all right? And again, when smart money comes out to buy a particular stock, okay, they don't just buy. Let's say they want to buy 1 million shares of I don't know, Facebook or LVS, whatever the hell it is. If they want to buy 1 million shares, they have to mask their intentions on the level 2 and the time and sales. Otherwise, then everybody could see them. If you knew somebody was buying 1 million shares, wouldn't you buy ahead of them? Yeah, you definitely would. Okay, but again, they do their best to hide their intentions, and that's really what tape reading is about. That's what we're trying to get ahead of, to figure out where these guys are, what they're doing. Are they building a position? Are they selling a big position? Or are they just doing nothing? All right, and you can use it for equities, options, and futures. And again, just to go back to technical analysis, it has a lot of pitfalls. This system really used to work 20 years ago when it came out, simply because everybody was using it. There was so much volume, and there wasn't a lot of computers out there, or algo trading, so to speak. And now we're in a period in time where a lot of that analysis is used against you. Okay, because again, if they know everybody's piling into the same trade, and when I say they, I mean the smart money, hedge funds, large institutions, a lot of the guys at Goldman Sachs who sort of control a lot of the flow in the markets. And also see a lot of the flow in the markets. Imagine, obviously, they're going to take advantage of you guys, and that's why you got to stick to the price action. So, what does it take? Okay, and again, this is where we're going to expand on the time and sales and your level 2. Okay, so you got 2 tools here that comprise your tape. One is the time and sales, and the next is the level 2. Okay, and just to go with again a brief recap of what your time and sales is. It is a receipt of transactions. So again, guys, when a buyer and seller meet on a price and agree on a price, and this all happens electronically, okay, a receipt will hit the tape, okay, and then a actual trade will hit the tape. All trades have to be reported on the tape, even if they exist on a dark pool or they get executed off an exchange. Every single trade has to be reported to a time and sales. Okay, even if you can't see the quote on your level 2, all of those trades have to get reported. Okay, so let's keep going here. And what you're seeing up here is your date, timestamp. All trades have to be timestamped with exactly when the trade went off, price the trade went off. This was the bid and ask when that trade went off, okay? So this was the quote on the level 2 when that trade actually went off, and this was the number of shares that were bought and sold for that particular trade. Remember, every single trade has a buyer and a seller, okay? Very important concept. Every single trade has a buyer and a seller, all right? We're going to expand on that too. So here's your level 2. What you're seeing on the, basically what you're seeing, and again, what I want you guys to picture, again, this is a limit order book, okay? No trades have actually taken place here. This is a limit order book. This is where the whole market is. This is where everybody wants to buy and sell your particular stock. and they're laying it out for you, and this is what you can see, okay? So for example, in this case, you know, you have a bunch of buyers here for, let's say this is Apple, trading at 629.41. Somebody wants to buy 100 shares. MMID, this is your market. This is your exchange that the trade is on, okay, or that the limit order is on, okay. So when you're looking at MMID, that is the actual market maker, okay? So if the, you know, the trade is put out on ARCA or trade is put out on INET, this is sort of the advanced level of tape to understand order routing and where your order actually goes. I mean, how many of you guys actually know where your order goes or what exchange it goes to when you actually send your order? So let's say you want to buy, I don't know, 100 shares of Apple. How many of you guys actually know what exchange it goes to? Go ahead and throw yes or no in the chat here. Do you know where it goes? Do you know what exchange it goes to? I'm guessing half of the people in here probably don't. And this is sort of the higher level of understanding that you'll get if you continue with us. So,
hey, Lucci.
Yeah.
You got about 80% of the people that don't know, actually.
Yeah. And again, I'm not surprised here. So what this means to me, again, I mean, this is all retail money. So in the higher level structure, okay, of the markets, there is a lot of advantages that smart money and institutions can take from you guys by knowing where to route your exchanges, okay? It's just a big game back there. There's 13 different exchanges. They're all competing for your retail flow, and you guys have no idea where it's going, okay? And meanwhile, your brokers who are routing your orders, they make money off of where they route your orders. You guys, generally speaking, retail money has no clue this is even happening, okay? And they also don't know how it affects them, okay? So this is a big, higher level of understanding in the markets from an actual structural basis that can help you a lot. And that's also something combined and looped in with tape reading as well, okay? So let's go through a quick example of how tape reading helped me with this Las Vegas Sands. Again, we built up this trade last week, but we're going to go ahead and breeze through it again. So this chart right here, I mean, how many of you guys have been in this situation where a stock has been in consolidation? And guys, I mean, you've been watching this LVS, by the way. If you pull up this LVS now, look at where the stock is now. The stock is at 67 now, okay? So that's a rip from, whatever, 56, 57. That's a 10-point, 12-point rip right there, okay? Now, to be at the forefront of these kind of trades, you have to understand manipulation. You have to understand how the smart money is gaming a lot of the retail flow. And I'll tell you one of the big reasons how, okay? This is what we see happening on a daily basis, especially with some of these big picture breakouts that you see on names like your Teslas and your LVSs and your Facebooks and things like that. So what happens is sentiment gets pushed to one side. Everybody knows that the stock is going up, right? So you're going to use all your indicators in the world to tell you that this is a hedge formation or a wedge formation or a triangle formation or a baking almond soda hammer, whatever it is that you guys want to call it. Everybody knows this stock is going long, right? So what is everybody doing? Everybody is buying call options. So whether you're buying weekly options or whether you're buying monthly options, or even if you're buying 2 months out or 3 months out or even 6 months out, right? Everybody's doing the same thing and buying call options, because what do you see here? You see that we're in a bullish market, right? You see that the stock can't sell off below 56. Everyone wants to go long. Now, what's the key thing to understand here? Remember, when you buy your call options, who are you buying them from? You think you're buying them from the next guy? Who do you think you're buying them from? Go ahead and put it in there. Who do you think you're buying your contracts from? Your actual call options. I mean, who do you think you're buying your actual call options from? Kyle, what do we got out there?
We got a few people saying, a lot of people don't know, a couple people asking if they're buying them from each other, a couple saying the institutions, one said the dark pools, so a little all over the board.
A little of everything. Okay, so who you're buying them from, guys, think about a casino, okay? Think about a casino. Has anybody been to Detroit? There's nothing but casinos over there, okay? And that's where Kyle lives, and he goes and gambles every single day. So basically, guys, when you think of the casino, okay, they are the smart money, and they're making the bets all the day, okay? And this is essentially what's happening here. Smart money is selling you those contracts, okay? Because they're the only ones that have the capital to do it. To sell contracts, you need to have a lot of leverage. And just like a casino, you have a giant pool of money that you can make all these small bets with. Basically, you're just betting that the customer will lose all their money and piss it away to you, right? So you make all these small bets, and you hedge them out over all these different, in this case with options, different strike prices, different expirations, weeklies, monthlies, whatever you want to look at. This is the smart money that is selling you those calls, okay? Now imagine this, right? You're smart money, you're the casino, okay? You're the casino, you have just laid out, okay? You have just written everybody call options like this one, okay, for 50 cents to $1. Let's say you've written 20,000, maybe 30,000, possibly even up to 100,000 contracts, right? And you know more information than the retail guy does, right? You know this stock is going to go up. What are you going to do? What would you do? What could you do? Think about it. If you wrote all those contracts to everybody out there, you know you were going to get smoked on them, okay? What can you do to put the edge back in your hand? What would you do? What would you do? Think about it. Kyle, what do we got?
People are pulling in, saying you got to know where the flow is. A lot of people saying they don't know how to get the edge back. Jack said that's why I'm here. We got a lot of things.
Okay, great. Here's what you do. This is exactly what you do. You tank the stock. Okay, number one, you tank the stock out. Number one, you can make it look like it's very weak and push retail money out of the trade. And what happens then? All of those call options, we take a look down here, all of those call options, they tank in value, possibly down to about 50%, 70% in value. You take a look at this option down here that was trading around 60 cents, 50 cents. It goes all the way. This was a 10-cent print down here. Okay, so this was a 10-cent print. Meanwhile, retail money. What is the mindset of retail money when this happens? What do you think the mindset of the retail money is? Retail money says, "Oh my God, this is not along anymore. I'm going to go ahead and sell my contracts." Now, who are you selling your contracts to? Okay, everybody answer that question. Who do you think you're selling your contracts back to? Kyle, what do we got?
We got the market. We got the not smart money. That's from Jackie. We have, they're asking market maker. A lot of people saying market maker or the rest of the market.
Right.
The buyers.
Okay, so that same smart money guy, okay, that was writing all those contracts to you, okay, and this could be a collection of folks, you know, this could be a collection of different institutions, traders, and the like, okay. All of those folks that wrote you those contracts for, let's say, $1 and change, okay, they stand to make money if that contract drops in price, okay. Now, the retail guy is long from, let's say, 50 cents or $1, whatever it's worth, okay? And then he goes down 80% on his money, right? He's going to sell those contracts right away because he can't stomach that loss. You're not a bank. You don't have unlimited potential or unlimited capital, so you can't stomach that loss. So what do? You sell your contracts back to the smart money. They pocket that gain, okay? And now they're long all your contracts, okay? Meanwhile, you're not long anymore. They're long those contracts, and then the big picture move happens. So they wash everybody out, okay? And then they make that move happen. This is the pattern that you really see sort of promote itself over and over again through the markets. And it's sort of simple common sense if you look at things from the smart money perspective. It's like, okay, I wrote the whole world these contracts. I know this stock is about to rip. There's no way I'm going to take a loss on all this because these contracts could go to the moon just like they did. But what do I have to do first? I got to wash them all out, get them all out of the trade, and then go ahead and make this move happen. Okay? So again, the money goes to the least amount of people when the big picture move happens. There's always this gigantic washout that is promoted by the smart money to get you out of the trade. These are called big washouts, okay? I'll show you. If you guys want to see another one and you want to pull it up on your screens, check out LinkedIn. Check out LinkedIn for the past 10 days. You'll see the same thing. You'll see a gigantic washout where everybody gets wasted on the call side, and then the stock comes right back, okay? If this market rallies within the next couple of days, you're going to see that LinkedIn at all-time highs. And meanwhile, everybody who was short, thinking this stock was going to tank, just like this LVS, just like this looks, they get smoked as well too, okay? So these are the games that are being played against you, and it's important to start understanding what they look like on the tape, okay? And we're going to do that right now, actually. And you see the money potential here for this particular option. By the way, this option went to $4 or $5. Stock is now at 7, or stock is now at 67. So there was much more potential for gains there on the swing. But let's take a look at some of the ways that you can find buyers and sellers on the tape and give you that confirmation that you need that there's some really big buyer back there. Okay, so now I got a question for you guys. We were long this trade. Okay, is the circled order good or bad? If you're long this trade, is the circle order good or bad?
All right, John said bad, bad. Jake, bad. 5,000 order on the down, bad.
Exactly.
Looks like most of them said bad. A couple said good.
Okay, great. This is awesome. Okay, let me tell you why it's not bad. Okay, let me tell you why it's not bad. And again, it's good. Why is that? Okay, because if you see a sell order for 5,000 on the bid, everybody is going to say, "Oh my God, this stock is tanking," right? Or "Oh my God, there's a big seller here." But what is it about this tape that is a little bit different? So what's happening here is that somebody sold 5,000 shares to this guy who posted 10,000 shares on the bid at 58. Now, if somebody sells 5,000 shares, okay, then that means the guy with the bid of 10,000 has to decrement what he wants for a 5,000, correct? I mean, if I'm showing I want 11,000 shares and somebody sells 5,000 to me, then I only have 6,000 left to buy, right? That's it. That's simple common sense. However, did this guy decrement? Did this guy show that this 5,000 that he only wanted now 6,000, or he only had 6,000 left to buy? No, right? So he has so much more to buy. This is one of the tricks of reading tape. And if you go back to this particular date, 9/4. September 4th, on this tape, you will see this buyer, okay, who posted 10,000 shares here. You will see him accumulate 100,000 shares, probably even more than 100,000 shares at 58 bucks, okay? And if you see a giant buyer like this taking in that many shares, that's when you know you have a very strong support, and that's when you know you have a very big buyer who wants stock, who wants a lot of stock. Now, let me give you some other tip here real quick. It was a couple days ago when the stock tanked through 65 bucks. And if you take a look at your charts on your platforms, you're going to see the stock tank through 65 bucks, and then you're going to see it just sit at 65 for hours. Okay? Take a look back at your 10-day charts on that Las Vegas Sands. You're going to see it. Now that buyer at 65, I guarantee you, was the same buyer over here. Right? He took in another couple 100,000 shares at 65 too. So it's no surprise that the stock is now at 67 bucks. And all those people who shorted got absolutely wasted. Okay? So these are some of the things that you can really see and use to give you a sort of a long-term swing analysis on your particular stock. Okay, this is a large buyer holding up the stock and taking in a lot of shares. All right. So
all right, Luch. All right, cool. Yeah, we got. So just so everyone knows, there's a little hand button on your left-hand side. I have a bunch of hands raised right now. So if you guys are seeing a point that you want us to slow down on, if I see a lot of hands raised, I'll make sure Lucci re-explains that. But yeah, Luch, we got a lot of people asking about this concept, just so you know. So let's make sure we keep going over.
Okay, absolutely, and you will. And again, I'm going to show you several different types of ways to look at these things. And again, this is not a something that you're going to pick up right away, but it's essentially what it is we are reading orders. We are reading order flow, and we are trying to assess that order flow and are trying to build a theory off of it. Okay, and that's essentially what we're doing. So if you see some guy at 58 chewing up shares, so it doesn't matter how many people sell to him, okay, whether it's 5,000 or another 1,000 or another 2,000, okay, this guy's still showing that he wants shares, all right? So if you know you have a giant smart money buyer, okay, that is buying 100,000 shares or 150,000 shares and not letting that stock go down, then you know eventually he's going to have to step his buy orders up because everybody is going to start buying in front of him. And that's exactly what happened as we go along. Now we see the stock at 58.5. And what we want to see is more confirmation that, again, that we still do have some buying. So right here you're seeing an offer for 2,000 shares at 58.54. Okay. Now, you know, usually these are levels of offers. This is 2,000 shares. For LBS, it's a decent amount. And if you see these sellers come in, you don't want to see it hold the stock down. Again, you want to see buyers just take it out immediately. And this is what you're seeing right here. So immediately somebody shows up, okay, I want to sell 2,000 shares at 54. There's buyers there that say, all right, yeah, give me that size because this stock is going up. This is the supply and demand dynamics that you're going to be able to assess as you sit there and read the tape. Okay, so buyers take the seller out. 3, you got prints going off on the offer. Okay, so 56, 57. She's going higher, all right? So that's generally how we want to read the tape. And again, I'm going to go back to some live examples here and some other examples as well. So first things first, let's backtrack a little bit and let's talk about how the time and sales and level 2 actually works together, okay? So now you're going to see something really cool. You're going to see a 5-minute video clip of just the time and sales and my level 2, okay? So this is basically what your time and sales and level 2 is going to look like. Now, time and sales is over here on your right, okay? So this is when the actual transactions go off, okay? So anytime there's a transaction, meaning somebody actually bought and sold something, it's going to pop up over here, okay? And then you'll notice it pops up pretty quickly if there's a sweep of orders. You'll see there the timestamp and everything, okay? So here is your time and sales, and this is your level 2, okay? So let's break this down to the simplest form, okay? So what's happening right here is that you have your buyers, you know, posting their limit orders, all right? And you have your sellers posting their limit orders as well. Now, depending on what gets printed on what gets actually executed, okay, your bids and offers are going to move around. All right? So this is essentially what is happening. You need to understand the dynamics that sort of move these ticks up and move these things down. All right? So what are the dynamics? I mean, number one, let's say a slew of orders goes off on the offer, just like right now. So you saw all those 95s getting taken out. You saw the 97 getting taken out. Okay? What's going to happen? Buyers are going to say, oh, maybe people are, you know, maybe people are a little bit stronger. Notice most of the ticks now are happening in the 90s. Maybe this thing is getting a little stronger. I'm going to step up my bid, right? So my 100 shares at, let's say, 79, I don't want that anymore. I'm going to put it to 90. I'm going to put it to 182.90, okay? So now, basically, you're trying to figure out and you're trying to assess supply and demand. You take a look at this bid right now. Somebody popped up a bid for 800 shares at 92. Look at that. 183 gets printed, okay? And now you got another bid stepping up to 182.95. Now, again, the market reacts immediately to what is happening on the tape, okay? If somebody is out there buying aggressively on the offer, then these bids are going to slowly step up, and these are the dynamics that you're going to see that help push the market up, all right? So in this case, we're looking at the Tesla, you know, whether you're looking at whatever stock it is that you're looking at. Basically, you're trying to assess supply and demand dynamics through the transactions that go off on the tape, all right? Sometimes you'll be able to gauge if you have a big buyer, a big seller, or you have nothing, okay? And there's often times where you're going to take a look at tape and you have absolutely nothing, okay? Now, in this case, we've already seen the stock tick up 40 cents, all right? So there's plenty of scalp opportunities for people who want 10, 20 cents or whatever, okay? But notice, it is all dependent on what's going on your time and sales. Where are the transactions going off? Are people buying aggressively? Are they selling aggressively? Are they stepping down offers on the level 2? What's happening on my level 2 as a result of these transactions, okay? So, just to make sure, just to reiterate, again, I want to make sure that everybody here understands what the hell a time and sales is and what is a level 2, okay? So just to reiterate here, what you're seeing on your level 2 is just quotes, okay? You're just seeing quotes. You're seeing the current quote for Tesla. That's all you're taking a look at, okay? Somebody wants to sell up here and somebody wants to buy here. Now, when an actual transaction goes off, that's when you're going to see it come out on the time and sales, all right? That's when somebody actually buys and sells something. Now, remember, every single trade has a buyer and a seller, but the important thing is to assess supply and demand. One of the things that people get confused when they're sitting there reading the tape is that how do I know if it's a buy or a sell, right? How many of you guys are asking that question right now? How do I know if this order is a buy or a sell, right? I mean, most people will ask that question. Kyle, everybody saying yes?
Yep, most everyone's saying yes, over 90%.
Exactly. So how the hell do you know if it's a buyer and a seller? Well, I am here to tell you that that is not what you're looking for, okay? Every single transaction has a buyer and has a seller. What you are trying to do here is assess, okay, are there more buyers right now or are there more sellers? Or are they equal and there's really no trade here, okay? And what we're going to do is we're going to come back to this tape so that I can actually give you my analysis of what I actually think about this particular tape at this moment in time, okay? And basically we're going to walk through it together, and I'm going to show you, some of the things that I'm seeing in this particular tape as we move forward, okay? So this is, I think, where it cut off. Let's go to the next slide here. Okay, so again, time and sales versus level 2. What is the difference? Okay, time and sales is the record, okay? It's the record of your transactions, all right? That is where you're going to see the report of what is happening in that actual market that you're watching. So whether you're watching Tesla and LVS, whatever it is, you are seeing the record of, it's the receipt of transactions, okay? And your level 2 is the intention, okay? What people intend to do. So if somebody wants to buy, somebody wants to sell, that is their intention. These are just quotes, okay? Nothing has actually happened. They are just quoting, okay? And again, make sure you write that down. Make sure you remember it. Next time when you take a look at your level 2 in time and sales, you'll be like, oh, that's why I couldn't get it, okay? So again, on your level 2, it is just quotes. That's all you're taking a look at, okay? So where are you guys at right now? I mean, right now, what are you guys saying to yourself? I mean, I'm going to put you guys in sort of a couple different categories here. So right now, you're probably saying to yourself, one, I'll never be able to do this, okay? And let me give you guys the spiel of when I started out. I mean, when I started out, prop trading in 2007, right? And I'm taking a look at time and sales, and one of the key things that I realized after 3 months at that prop firm, I was like, wow, this is such an edge over some of the other things that people start out with, okay? And then 3, I already know how to do this. I mean, if you're in 3, you don't need me. Chances are you don't need me, and you're off, do your own thing, and good luck to you. So guys, I mean, where are you at right now? 1, 2, or 3? I'm guessing most of you guys are in 2. I'm guessing most of you guys are in 2. Kyle?
Yep. Looking, most everybody's in 2. If I work at this, I can do this. A couple are saying 1 though. We got a lot of, a couple of hands raised still 2. I think it would be the issue. Hang on, Luch. A couple more coming through right now. PWU just said, I'm confused. I thought the bid is what I am as retail I am selling or what I'm willing to sell. So it looks like most everybody's in 1 and 2. Okay. Doesn't look like anybody's in 3 so far.
Okay, great. And the ones who are in 1, I am here. This is a webinar that I'm going to be doing for the rest of the day. And again, I will, okay, and just show you what they look like on platforms and how to access this information. Again, I know most of you guys have never really looked at tape before. So how do you get it on your platforms? Let's get that all set up before we actually talk about some serious tape here, okay? So the first thing that we want to do actually is what I'm going to do is I'm going to share some screens on a couple different platforms here, all right? So let's take a look at Thinkorswim first. First thing we're going to take a look at is Thinkorswim, okay? So everybody should be able to see a time and sales. Now, what happens whenever you pull up your Thinkorswim, the Think desktop platform, what you're going to see is just a bunch of charts. You're just going to see a bunch of charts. You're not going to see your time and sales or your level 2. So you're going to see a chart pull up. All you want to do is on the right is click time and sales, and then you want to click your level 2. Okay? And this will show you the market data for that particular equity or for whatever you're watching. Okay? And if you want to do it full screen, this is actually what you're taking a look at. So what you're taking a look above is the price that goes off. Okay, how many shares, time that it went off, and then at the bottom, when you take a look at your level 2, you see the exchanges that the orders are posted on, and then you're seeing the bid, the offer, and then how many shares are being bid and offered. Okay, so now, Kyle, I think we had a question before was about if I was on the bid or I'm buying on the offer or something. Somebody was confused about the level 2 in general. There was a question that I wanted to address before we actually go on. Kyle, can you find that one?
Yeah, it was PWU, and he asked, I'm confused. I thought bid is what I am as retail willing to sell.
Say that again?
He said, I thought as retail, the bid is what I am willing to sell.
Oh, okay. All right, so let's take this even deeper. Okay, let's take this even deeper. If you put up a bid, okay, you want to buy your stock, okay, at whatever price. Now, where you're getting confused is, this is where you're getting confused, is that if you wanted to sell, let's say you own stock in the SPY right now, all right, and your bid is 169.91, and your offer is 169.92, okay, and let's say you want to get out right now. Where he's getting confused, guys, is that if he wants to sell, he has to sell to the bid, okay? So if he owns shares right now and wants to get out, okay, because let's say he thinks the market is going to turn or whatever, he has to sell to this guy at the bid, okay? So that's where he's getting confused. But all the orders that are on the bid, these are all buy orders. Again, you got to think in reverse, so to speak, just to shake your mind up and get it to understand what's really going on here, okay? So let me explain this again. This guy has 4,000 shares that he wants to buy at 169.88, okay? Now, if you're a market seller, let's say you're this guy at 169.91 for 1,700 shares, okay? You're offering that out at 169.91, okay? You can wait until somebody buys you, okay? Or if you want to sell this right now, what can you do, guys? What can you do? Show me that you understand this. If you want to sell this right now, if you're this guy for 1,700 shares at 169.91, instead of limiting your order at 91, what can you do right now to get out of this trade? What can you do?
A couple of people saying you can sell at the bid. A few people don't know. I can just hit the bid. I don't know.
Perfect.
Just those two.
Perfect. I can hit the bid. That's it. Now you guys got it. So instead of waiting here for somebody to buy my shares out, okay, I can take my 1,700 shares and crush these bids with it. So let's say somebody here in this chat room is one of the guys that are bidding out 1,100 shares at 169.89. I can sell directly to these guys. So that's where you're getting confused. You're getting confused thinking that, well, when I want to sell, I'm selling on the bid. Or when I want to buy, I'm buying on the offer. You're doing that because you want in now and you don't want to wait. Remember, these are all limit orders. So if somebody's putting a limit to buy, they're putting it on the bid. If somebody's putting a limit to sell, they're putting it on the offer, okay? So hopefully that clears things up for you guys, okay? So again, that's the TOS platform. Anytime you want your time and sales or level 2, you're just going to see these little tabs on the right. Just click L2 and time and sales. That'll give you what you need, okay? So let's take a look at another platform. Let's go to Fidelity, okay? So Fidelity has an active trader platform. So let's take a look at that one. Let's see. What do we got here? What do we got? Okay, here we go. Okay, so here we go with the time and sales on Fidelity, okay? Now again, Fidelity has a lot of other options. Fidelity has a pretty clean and easy platform to use. All your tools are going to be laid out right here. So anytime you want a level 2, you pop up here, you can see a level 2. Whoops, looks like I got popped out of this.
Hey, Luch, while you do that, too, I got a really great question that's probably good to answer right now. And, folks, I have a ton of questions coming in. If I don't answer you, don't worry. In the chat, I'll make sure to – we're going to get to it in study hall, okay? So Chrissy, Pinikin, Charles, Mike, Michelle, Helen, Warren, everybody. Real quick though, Luch,
Sure.
Charles R. asked, why not just look at complete volume bars instead of trying to decipher market maker games on trade flow?
Awesome, awesome question. So here's the deal with volume bars, okay? Number one, you have no idea why those volume bars are going off. Number one, that's number one. So what you could do is filter out for time and sales data, let's say, on your time and sales. So what I could do here is I could filter it out to only show me orders of a certain size. Okay, that might help. That might help you in general filter out some of the noise. However, just looking at volume bars, well, you don't really know what's going on. You still don't know and have built a solid theory on if someone is buying or if someone is selling. So you're just going to see order flow. That's it. So if you see a giant volume bar, well, that doesn't necessarily mean that it's reversing or whatever the setups that you usually use. So let's say a stock is tanking and then you see a giant volume bar. That's usually when the stock turns, right? That's not always the case. That is not always the case. Sometimes when you're in consolidation, you'll see a giant volume bar. Well, what is that guy doing? You don't know what he's doing. You don't know. You don't even know the reaction of the market after that. Okay, you're still waiting after you see your volume bars for what the market reaction is, or in your case, what the next candle is, or what the next volume bar is. Whereas, if you actually see it playing out on the tape, like we showed you on that LVS, okay, and if I scrolled through that whole hour with you on that LVS, you would see that volume bar. But this time you would see a giant buyer accumulating shares, okay? That's what you would really see. And that gives you the real confirmation that you need to go for, again, some of these longer swing plays or to just aggressively go for a day trade, okay? So even though you're taking a look at your volume bars, you don't really know what happened. You don't know if somebody hopped in on a dark pool, if it was just some random guy that just wanted to get out of shares or wanted to buy shares. You have no idea. And again, through theories and through looking at a lot of this different tape, that can give you the bigger edge. And again, when you're using volume bars and candles and things like that, there's no real edge there. Everybody's still looking at those, okay? There's no intent. You don't know what's going. You still don't know what's going on. All right. So to continue here with Fidelity, any of these active trader tools, pretty easy to use. Go up here on your time of sales and your level 2. You can access both of these things. And again, this is what it'll take a look at. And these will scroll throughout the day for you through your whole platform while you trade every single day. So you can put them up next to your charts. You can put them up next to whatever your other data feeds are, and then watch these as you're watching some of the indicators that you do use. And that's it. But for me, I don't use charts. I don't use charts. All I do is I sit here and I look at this tape all day. Okay? So that's how you set up your time and sales and level 2 in your different platforms. Now, some of you guys who don't have active trader platform, like let's say Fidelity or the Scottrade or even Thinkorswim, and you're using a web-based platform and you're just sort of retail customer at, let's say, Options House and things like that, it gets a little bit more difficult to see all that information at the same time. And again, I mean, this is one of the constraints of having an account that's less than $25,000. For most of you guys who have accounts of $2,000 or $5,000, generally speaking, you either have Thinkorswim or you have some retail web-based platform that you can't really get access to a lot of data for. Sometimes you even need to subscribe to a time and sales and level 2. So I know interactive brokers, they won't even let you see a level 2 unless you pay $10 a month. They won't even let you see a time and sales unless you pay $10 a month. So for anybody out there who is still unsure of how to get this stuff up on your platforms, contact your brokers, guys. We have so many questions on how. Well, there's a couple things that I want to make sure you guys are aware of. Number one thing to discuss is the type of stocks they're going to take a look at, okay? So what we have is high volume, medium volume, and low volume stocks, okay? Depending on where you guys came from. I'm sure a lot of the people in here trade a lot of penny stocks, maybe a lot of biotechs as well. There's a lot of retail money in those kind of names, okay? Now, the high volume names are examples like Apple and the S&P or the SPY ETF. Now, these stocks trade, I would say over 10 million shares a day, okay? So you take your Bank of Americas, You take all these names, your Teslas, a lot of the Facebook as well. These are all high volume names. They also have high volume options chains as well. So when you take a look at the volume done on the option chain for many of these names, you'll see a lot of volume there, okay? Now, some of the things to realize with high volume names, number one is there's a lot of market makers. There's 10 times the number of market makers for low volume stocks that there is on high volume. Now, why do you think so? Well, I mean, everybody's trying to get a piece of the pie. So if there's so much game in Apple and there's so much action or intraday action on a daily basis, everybody's trying to get a piece of the pie. So the retail money is out there, the market makers are out there, new market makers show up all the time just to get a piece of the pie, okay? So that also amps up the volume as well. And then when you get high volume stocks, you also get the HFT out there, okay? So high frequency trading comes up when they see arbitrage opportunities between some of the dumb things that retail money is doing or some of the dumb things that smart money is doing. Again, HFT comes in to prey off the people involved. That's what HFT does, okay? The medium volume stocks is where we recommend you do start. We're going to show you the St. Lucie starter names so you can get started using those. Now, the low volume stocks, majority of the other names, penny stocks are included here. But you take like stocks like a Priceline, or take a stock like MasterCard, or take a stock like AZO, AutoZone. What you'll notice about these names is that they're they have very low volume, under 1 million shares traded, okay? And the spread is ginormous, okay? That's one thing indicative of a low volume stock. You have giant spreads. Now, who makes money off of giant spreads? The market makers are the ones making the money off of giant spreads. And again, this is sort of an advanced concept. When you understand how market makers and smart money play the game, that's where you also iron out your edge too, okay? So with low volume names, that's when you're really fighting against some of the smarter money out there. So I recommend, again, starting with the low volume names just in the beginning, because it's very difficult to get a read on them, okay? The reason why I want you to peg the middle ones is simply because it's easier to get the read on these stocks. So, you know, the tape is a little bit slower, it's more controlled, easier to read. Facebook, it's a little up there. I mean, I want to throw that out there just so you can know how a big beta name, especially one now, you know? I mean, you take Facebook a couple of months ago when nobody was even talking about this thing. It would just move 20 cents a day, didn't really have much action. JP Morgan is always a recommendation because it moves pretty well, has a thick options chain, and the tape is tighter spreads, nice and easy to read. LVS is the same way. Potash, United States Steel, these are good starter names to sit there and watch just to try to get an understanding of how all this stuff works. Okay, so developing your thesis. This is the most important part of the trade. Okay, so what happens here is you can approach it in two different ways. And this is assuming you are using tape. Well, number one, let the tape dictate your trade. Okay. Now, what this means is that, and I'll go back to my prop firm days, is we were learning how to scalp. Okay. So basically, all we would do is we would pull up stocks that were moving or stocks that had news on them. Okay. So let's say we were in earnings season, right? And I don't know, Nike had earnings. Okay. So the next day, when that stock opened up, chances are there was going to be some action on it. You guys know Nike just had earnings, and Nike blew it out of the water, and the stock's up like 5 points right now in the after hours, right? So you'd come in the morning, you would pull up Nike, and you would sit there and watch the tape from 9:30 in the morning to whatever, 10 o'clock, and try to scalp a trade on it. All you're doing was short-term momentum. So the tape would dictate, okay, if you have a temporary sort of flux in demand or flux in supply. That's it. That's all you would do. And it was 10 seconds to maybe 5 minutes to maybe 10-minute trade. Okay, it might last a little bit longer than that. But whatever you saw on the tape that got you in, whether it was a big buyer sitting on the bid, whether it was somebody aggressively buying on the offer, whatever it was that you saw, once that thing disappeared, that's it. You get out of the trade, you book your profit or your loss. Okay, so that's number one way that you can use the tape. Number two, develop a thesis and test it with the tape. So this would go back to names like Las Vegas Sands. So you have a stock in consolidation, but you don't know when to buy it, right? That's the biggest issue. Like, when the hell are you going to buy this thing? It's been sitting in consolidation for 2 weeks. I don't know when it's going to move, so I don't want to buy it now. But You sit there, wait for that washout that we saw, and wait for it to come back. Then you see your buyers come in on the tape. Boom. That's where you go. That's where your thesis is now confirmed with what you're seeing on the tape. The thesis is, you know Las Vegas Sands is going to be along, but you just don't know when to buy it. Okay? So this is the swing trading methodology where you're developing a thesis saying, okay, Las Vegas Sands is along, but you're going to test it out now with the tape because you don't know when it's going to rally and you don't know when you need to get in. Okay? And that's where the tape can help you to understand, okay, you know, now is the time and let's go. And the reason why timing is so important, guys, is if you're going to play options, you have time decay against you. Okay? So this is another big part of our strategy is the options trading. Okay? So what you're looking for on the tape, if you're going to be long a stock, make sure you guys do write these things down. Large bids stepping up, okay? And that would mean, let's say we saw that Las Vegas 10,000 share buyer step his bid up from 58 to 58.10, okay? And then he stepped it up to 58.20. And then he stepped it up to 58.30, and he's still buying shares. So what does that tell you? That tells you this guy's got a lot of stock to buy, and he's also aggressive. I can get in front of this guy, and I can make some money. That's basically what you're looking. And as a result of him stepping his bids up, what you're going to see is buyers aggressively hitting the offer. So what does hitting the offer means? That means that you guys remember the example on the level 2 that we showed with Thinkorswim. If you don't want to wait for your order to get filled and you want to buy now, you don't want to wait, what do? What do? You hit the offer. You buy the ask, okay? So you don't want to wait for your limits to get filled. You want to buy in, you want to get in, and you want to get in now. That's the dynamic that you're looking for. And then obviously you want to see large offers getting printed immediately because you don't want selling it out for smaller profit. Okay? Short sellers is pretty much the opposite here. Large offers stepping down, sellers hitting the bid, large bids getting taken immediately. What you're also wanting to see is underlying bearish sentiment in the sector, obviously, and then seller holding stock down during short squeezes. Okay? Very important concept. When you're short, you have to face a lot of short squeezes. This is the nasty part of being short. It's not as easy as going long. There's a lot of short squeezes that get you out, but if there's a big seller that holds the stock down even during these short squeezes, you know those sellers are going to keep coming back. Okay? And then consolidation tape is very important to know what not to trade. Okay? So this is a tape that you can take a look at and say, I don't even want to trade this because there's zero conviction here. And, you know, it just doesn't look that convincing. You know, I don't see that much aggression from buyers. I don't see that much aggressiveness from sellers. So I'm not going to do anything. I'm just going to sit here and do nothing, okay? You're predicting one of the 3 things if you're going to make a thesis, long, short, or consolidation, okay? If it's consolidation, you're either writing options for time decay like the smart money, or you're doing nothing, all right? Time frame is very important for now. Again, we're assuming you guys and that will help you clue you in to how I use this to make decisions on a daily basis, whether I want to go long or short a particular stock, okay? So what we're going to do here is read this tape from ground up. This is a 5-minute tape. Again, we're looking at the same time and sales, and I'm going to read it to you as I see this thing go higher or go lower and everything. Okay, so number one thing that I'm taking a look at is where are the prints going off? Okay, are they going off on the offer or are they going off on the bid? Notice they're all in the 90s here. Okay, ooh, we get a sweep down here in the 80s, but if you get a bunch of sellers and bids continue to hold the stock up, then